reference to the fact that the government's borrowing money. Why then did the government increase the amount of money that it was borrowing in order to fund tax cuts, which go so disproportionately to the people who are already best off in society? I will turn to this bill. As previous speakers on behalf of the previous speaker on behalf of the Labour Party has said, we support this bill, which improves the portability of retirement savings as between us and Australia. There are some restrictions on portability which I know will disappoint some people. For example, under Kiwisaver, the Kiwisaver contributions can be used by a first home purchaser to go towards their deposit, but as I understand it, the agreement with Portability with Australia means that the savings that are transferred from an Australian scheme to a Kiwisaver scheme cannot be used towards a house purchase in New Zealand, and that's a sad detriment, and let's hope that sometime in the future that might be able to be fixed. Mr. Speaker, I think that this discussion about Kiwisaver, there need to be a couple of points made. Firstly, New Zealand has an abysmal savings record. We really do have a poor savings record. We have for many years as a country spent more than we earn, and that's reflected in our current account deficit. Increasingly, it's reflected in the non-tradable part of our current account deficit, in the amount of interest and dividends that flow to other parts of the world as a consequence of us owing ever greater amounts to overseas jurisdictions. And of course, this bill here, which improves portability of retirement savings as between Australia and New Zealand, only exists because the prior government introduced Kiwisaver. Were it not for that, we wouldn't have portability of retirement savings. And it's notable that the national government opposed the budgets when we introduced Kiwisaver, and their mantra at the time was that we should have been having more tax cuts, more income tax cuts, which would have meant that we couldn't have afforded the incentives that were put in place by Kiwisaver. And indeed, following their election as a government, the National Party, or the National-led government, faced with a choice between keeping the generosity of Kiwisaver and income taxes cuts, opted for income tax cuts ahead of improved savings, which was a bad mistake for New Zealand, because even though Kiwisaver has begun to improve New Zealand's savings record, it's still lamentably poor compared with, for example, Australia. Now, Australia's going in the opposite direction. Australia have just announced in their latest budget that over the next few years they're increasing their compulsory savings through their workplace savings scheme or superannuation scheme from 9% of earnings, which it currently is, to 12%. Makes our savings look lamentably poor. Now, the national government has said repeatedly through Bill English, they've got a mantra that says that this latest budget is the greatest tax switch or something in the last 20 years, and that somehow they're changing the shape of the New Zealand economy in a dramatic way following their last budget. Well, we all know that that's an exaggeration. There is a change towards taxing consumption through GST with reciprocal decreases to income tax, but of course there are two things to be noted about that. Most of the net benefit of that goes to the people who are the highest earners, and the total proportion of tax that's paid by the lower two-third earners in the country goes up, and the proportion of tax paid by the higher earners goes down. The other point is that in respect of low to middle income people, they actually generally have to spend all of their earnings to live. So although they might get an increase in their after income tax income, they spend it all, and so they have to pay GST on everything that they spend, essentially, or most of what they spend, and therefore they don't end up much better off. If the government was really interested in catching up with Australia, they would have addressed the biggest difference between New Zealand and Australia, which is savings and investment. Australia has more savings, they've got deeper capital markets, they've got more money to invest in profitable, sophisticated enterprises that generate foreign exchange earnings, and also avoid ownership of their own country by overseas interests to the same extent, because of course if you sell something to an overseas party because you're running such an enormous current account deficit as New Zealanders, they in the end get the dividend flows from the future profits of the enterprises that they have purchased from New Zealanders, and they, in the case of lending to New Zealanders via banks, they also get the interest flows. And if people don't believe that that's the biggest difference between New Zealand and Australia, if they really do think the big difference between New Zealand and Australia is mining, they're sadly mistaken. I saw a presentation recently from Rick Boven from the New Zealand Institute, who told us that the mining accounts for approximately 10% of the difference between the earnings in Australia and New Zealand. 10%. It's not even the majority, it's 10%. There might be some other flow-on benefits through other parts of the economy, but essentially 10% of the difference lies in mining, not as the Minister of Economic Development for New Zealand, Jerry Brownlee, would have you believe that that's the big difference. The big difference lies in capital markets and savings. And if you want an example of that, reflect on the fact that the four biggest banks in New Zealand, their profit in 2007 their combined profit was more than the combined profit of the rest of the NZX 50. That's the 50 largest companies in New Zealand on the New Zealand Stock Exchange. So the combined profits of those four banks was greater than the profits of the balance of the NZX 50. And then reflect on the fact that those four banks, they're Australian owned. So the Australians own not just their own banks, they own ours, and the collective profitability of them is bigger than the rest of the NZX 50 because we haven't got much left there that we own either. So, Mr. Speaker, it's absolutely clear that the big difference between New Zealand and Australia lies in the fact that over the years they've saved. And I'm pleased to see Sir Roger Douglas here because I'm pleased to again acknowledge him in respect of the changes that he's tried to make in New Zealand for actually close to 40 years on this issue now, going back to the Kirk superannuation savings scheme that he was responsible for the design of, and subsequent moves. And every time a Labor government makes progress towards the sort of progress that Australia's made, and actually Australians started later than Kirk, but look what it's done for them. But every time Labor makes progress on those issues, National comes in and undermines it. They come in and they undermine it. So, you know, it is good that this portability legislation is in front of us, the House today. It wouldn't be here but for the prior government's Kiwisaver, the introduction of Kiwisaver by the prior government. But more importantly, it is an opportunity for us to reflect on why New Zealand is so much less economically well off compared with Australia, and it relates to savings. I really can't emphasise that enough. That is the big difference between New Zealand and Australia: savings and investment. Another area that's related to this, which is not addressed by the bill, but which I think needs to be considered, is the tax mix in New Zealand. Our tax mix in New Zealand is different to that in Australia and the rest of the OECD, and despite Bill English's comments to the contrary, his so-called tax switch did nothing significant to change that. Their tax switch not only was unaffordable in terms of the effect on the government deficit, it has also increased the tax burden of businesses as opposed to individuals. And given that we rely upon businesses to generate the wealth that we need to earn incomes and generate the taxation revenue that the government needs to pay for health and education, it seemed to me to be a retrograde step, particularly the reduction in depreciation for short-lived assets that are so expensive for our export businesses to purchase. So, Mr. Speaker, Trans-Tasman portability of retainment savings, a good thing. Sad that we can't enable people to use them for a first home purchase deposit if they bring back money for Australia. Progress nonetheless, but the big difference between New Zealand and Australia is savings, and this bill is an opportunity to highlight that. Thank you.